What's going on, guys? Kyle Finance Bro here. Today is the first of probably many videos that I'm going to be making about my dividend portfolio. Now, we've made a ton of videos talking about day trading, swing trading, and option trading, and talking a little bit about how risky those plays can be. You see, me and Zach have come to the realization over the past 2 weeks that these plays can be incredibly risky and pretty inconsistent in the market, unless you're really good at what you're doing. So we decided to take a more long-term approach to things and play it safe. We think by playing it safe, we're gonna be able to make a lot more money long-term and set ourselves up for a much brighter future than someone who loses money on day trading, for instance. Again, no diss on people who day trade, swing trade, or options trade. I still think they're viable trading strategies, but again, you should do your own research and you need to be well educated and versed on how to do them properly and correctly and risk management and all that fun stuff. What we're talking about today is dividend investing. I made a few videos already on dividend investing. Zach also just released a video recently about dividend investing himself. You should go check it out if you already haven't. But currently, I don't have any positions with stocks that pay great dividends. So I figured, what better time to start it than right now? All right, so we're gonna get into it. I have the screen recording up right now. As you can see, we are in Robinhood. If you don't like the fact that I'm using Robinhood for long-term investing, sue me. I really don't care. I think it's a good brokerage, and until I'm proven wrong or otherwise, I'm not gonna stop using it. As you can see, our account balance right now is about $1,047. Not bad, could be better. What we're gonna do today is we're gonna look at our first possible dividend position that I'm thinking about getting into, and that's realty income. Now, for those of you who don't know, realty income basically is a real estate company. They essentially, in a very boiled down sense, pay you monthly dividends from the income that they generate through either properties, commercial, or rental. The big thing with this stock, obviously, is that it's monthly, so you will get a 4.30% dividend yield per share. This is a REIT, however, so it is taxed a bit differently. Don't quote me on that. I'm not a CPA. You should talk to one before you invest in these types of things, especially if you're concerned with taxes. But I really like realty income, and it looks like on the day it's down a little bit. It has seen a bit of a pullback, but I think this is still a relatively good price, so I think we're gonna make a trade. A market order for 4 shares. I don't really care about the price that this is being filled at because it's not like this is a day trade where every cent matters. I'm in this for dividends, not necessarily for the money that comes with trying to swing trade this or day trade this. So it looks like our execution price was $62.13. Total cost was about $248. We now own 4 shares of realty income. So that's pretty cool. I'm thinking the next thing I want to look at is AT&T. So obviously AT&T is a very huge telecommunications provider in America and the world. And they also pay a very good dividend coming in at 7.21% per share. My only concern with this is looking at the 5-year chart. AT&T is downtrending quite a bit with all of this. I do think AT&T does have a lot of room to grow though, however, because of things like 5G and, well, ever expanding online communications and telecommunications. So I think it's not a bad long-term hold. So I'm gonna buy a few shares. See, the hardest part for me in the market, and something that I'm really working on, is trying to not be as much of an emotional investor. Somebody who gets so caught up in a share price or FOMO into something that he doesn't understand. I just need to stick with something and go with it. And we're gonna lock in that trade at 10 shares at the estimated cost, $283.75. Now, what I'm thinking is having these 2 stocks is a bit risky, right? We need to manage our risk a little bit better and maybe buy into an ETF or something that tracks all these other stocks for me so that I don't have to worry about it as much. And with that, I'm thinking that Vanguard High Dividend Yield ETF, otherwise known as VYM, is a good pick. If you look at the stock, the dividend for it is about 3.28%, which it's not bad, especially for an ETF that will historically, ideally, do better than most of the market, if not the S&P 500. So I'm thinking this is a buy. So I'm thinking we're gonna just lock in this trade real quick with 2 shares. I mean, it's an ETF, it's down today, so we're gonna get a pretty good price for it, and we're gonna buy it. A big advantage to the market today is that it is down very heavily. It does concern me for the future with a lot of things coming out, more COVID cases, some issues with the economy and things like that. But again, if you're a long-term investor, you're not trying to time the market, you're spending more time in the market because no matter what, you're always going to be able to have gains if you hold long-term. So overall, we have 3 stocks in our portfolio. I think we need maybe 1 more good dividend-paying stock that's very reliable because we still have $343 left of buying power. Now, we could top this portfolio off with VU for an index fund, which I do have my watch list down here, or we could do a realty-based income fund like SPG, which, if you don't know, Simon Property Group, they're pretty big. They have malls all over America. and their dividend is about 11 point something percent. Don't quote me on it. You know what? I made my decision. I think we're gonna go with VU for the very last one. We have enough dividend stocks in there. We can just add to those positions over time. We have enough money for pretty much one share of Vanguard S&P 500 ETF. I could buy into it fractionally, but I'm not a big fractional shares guy. I like to see my stuff. And we're gonna put one share in here. We're gonna review the order, and price is looking good. We took a huge drop today, but hey, buy the dip. As you can see, we have our 4 stocks on the right here, and everything's down, like everything. So that's pretty cool. But it looks like our portfolio is good to go. I'm gonna turn on what's called DRIP, which is Dividend Reinvestment Plan, which for those of you who don't know is a crucial key in a dividend snowball where eventually your dividends will stack into more shares and more shares will stack into more dividends and on and on and on and so on and so forth. I will more than likely change the positions on this and add to them as I go. We'll probably make update videos in the future about this portfolio, but for now, I think we're good to go for today. So again, I don't recommend you guys copy what we're doing in this portfolio. This is not something that I would recommend you guys do. I'm not a financial advisor, nor is this financial advice. This just works for me and my own risk tolerance. So please invest at your own risk, consult an expert. Don't copy my trades. We'll see how this all goes, and we'll do updates as we go with more videos on this kind of stuff. And let us know down in the comments if you want to see more stuff about dividends. These videos do a little bit better than other videos about stock related stuff, so let us know if you like them. Also, please subscribe to the channel. We need 1,000 subs and 4,000 watch hours to get monetized, and being monetized will allow us to bring more amazing high quality content to you guys with even bigger budgets and better plans. But other than that, guys, that's all I have for you guys today. I'm Kyle with Finance Bro. Take it easy.